Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, August 28th, 2019. We again find ourselves in the final hour of the market. As I mention each day, in my opinion, I believe that the closing prices of the day are the most valid prices of the day, and therefore those are the prices that I make the majority of my buying and selling decisions from during the intraday. During the regular trading day, the market's dominated by algorithms. There's a lot of noise. At the end of the day, the market makers and large financial institutions come into the market, take control of the market. They're the best equipped, the smartest, best information, and I believe they move the prices to what the most valid price should be, and therefore that is the price that I want to make my buying and selling decisions from. So anyway, thank you everybody for coming today. I really appreciate it. As always, I appreciate you spending your time with me, investing your time, and I hope what I'm teaching you and showing you is paying off as far as a return on your time investment. So hope everybody's doing well. We are having a green day today. The Dow Jones is up 241 points. The NASDAQ is up 32 points. The S&P is up 18 points. The clear winner today is the Dow Jones. NASDAQ is lagging today, and the S&P is doing okay. So anyway, I just want to make sure everybody can hear me. If you can hear me, do me a favor and just say hi or yes or peace sign or something, just to make sure that all the technical stuff's working. I had a little technical issue yesterday, so I'm glad to see. I think that we're not having any problems today. So let me take a look here. All right. So the plan for today, the format for today, as always, is first of all, we're going to go ahead and we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward. Then we're going to do a few minutes on trader psychology. As I also mention each day, trader psychology is the most important skill in trading. It's not hard to hit a buy or a sell button. It's not too hard to learn technicals, but what is hard is to get your emotions under control. And so I always like to do a little saying or present something that will kind of bring that home to you. But, you know, it's important, everybody. The best advice I can give anybody in trading, really the best advice, is look at trading as a long-term endeavor. Don't look at it as something to get rich quick with. Identify your setups, position size correctly, take the trade. If it's a loss, keep the loss small. If it's a win, be open-minded. Let the price run. Let the open profits run. But you know, if you're trading correctly, you should have an edge, and over the long term, that edge will play out. In the short term, anything can happen. So position size correctly, take the long view, don't get too emotionally involved in trading in winners or losers. And if you take a long view, you take a 5-year outlook, you take a 10-year outlook. If you keep your emotions under control, you trade correctly, you keep your losses small, you let your winners run, I think you're going to do fine in this game. But what most people do is they try to make money too quickly. They get greedy, or they go through losses and then they're scared to take the next trades. And then, of course, those are the trades that work. And this all comes down to having your emotions and your psychology in check. But like I said, the best advice I can give is take the long view. Don't get too excited about any one trade. Take the long view. Trade correctly, keep your emotions under control, and that's how you're going to succeed at trading. Okay, and then after that, we're going to go through my watch list. We're going to take a look at each stock in my watch list. We're going to look at support and resistance levels, moving averages, MACD, RSI, ATR channels, V1, V2 entries, And, these are the tools of the trade, right? As far as getting into positions. And if you want to get into a stock position, you want to get in where other buyers are going to be. You don't want to start buying where there's going to be other sellers. And how do you determine that? Well, I determine that with technical analysis. I determine that with my indicators. I look at my indicators as groups of buyers and groups of sellers. So if you want to get into a stock where, and obviously you want it to go up, you want to get into where other buyers are going to be. And so, if you see multiple indicators lining up on the same chart, if you see them lining up on other time frames, that's a good indication that you don't just have one group of buyers, but if you have multiple indicators, that means you should have multiple groups of buyers. And again, it's very simple. If you want something to go up, you have to be in where other buyers are going to be. So that's kind of my take on technical analysis and how I view the markets and how I view indicators. And then if we find something at the end of the day, we have something that lines up correctly, I'll go ahead and take the position. And then when the market closes, if you guys have any questions whatsoever or comments, you want me to take a look at a particular stock, or you have some kind of trading related question, please feel free. Don't be shy. Just type it into the chat, and I'm happy to answer that after the market closes. So that is the plan for today. So, all right, looks like we are coming through. John is here. Hi, John. Good to see you, my friend. Thank you for coming by. Week tour. Maybe I'm not pronouncing that correctly, but thank you for coming by. Appreciate that, and the smiley face. Frank B says, looking good, Greg. Awesome, Frank. Good to see you as always. And Roy B. We have Frank B and Roy B. You guys brothers? And I got the one from Roy B. So, all right, good enough. Looks like we're coming through. So let's go ahead, run the U.S. legal disclaimer, get that out of the way, and I will be back in about 40 seconds. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. So we got that out of the way. So, all right. Well, look, let's go through, take a look at my current positions now, and take a look at when I bought them, why I bought them, and how I'm going to manage them moving forward. Alrighty, so starting with Amazon. I did buy Amazon back here on the 26th of August. I bought it because the previous day we closed under the 200 day, and then the day that I bought it, it closed back over the 200 day. So, this is a quantified, profitable, tested approach with Amazon. Stay out of Amazon when it's under the 200 day. You can enter Amazon, hold it as long as it is over the 200 day, and then get out of it when it goes back under. Some people trade this completely mechanically. They'll just buy it here. They will hold it as long as it will stay above the 200 day. That is definitely a valid approach. But because you have earnings with stocks, I don't really do a lot of mechanical trading with stocks because you're going to have to hold through earnings 4 times a year. So I do use the price being under the 200 and then closing back over the 200. I use that as my entry position or my entry signal, but then I manage it discretionarily going forward. So next day it gapped up, came back down, tested the 200, was able to close back above. That's why we kept it. Today was underneath the 200 pretty substantially, but currently at least it's closing back above, and I guess it's about right where we bought it. So as long as it holds above this 200-day, I'm going to keep it, you know, 1, 2, 3, 4 days of testing under the 200. There were no more sellers that were willing to sell down there. So that is a good indication. However, you know, the more times that you test the moving average, the more likely it's going to lose the moving average. So on the plus side, we have tested under here 4 times, so hopefully we'll move up. So going forward, if we move up here, I'm going to phase out a partial position each time I hit a profit target. If we close underneath the 200-day moving average, I'll just go out and lock in a small loss. But you know, it's key when you take your positions, try to take them as closely as you can to where your stop is going to be. That allows you a good risk to reward ratio. It allows you, you know, a lot of upside potential if you're right. But if you're wrong, which you're going to be a lot, it's fine. It's going to happen, but at least you'll keep, you know, you have some kind of line in the sand that tells you, am I in or am I out? My initial profit target up here is based on today's numbers, 1827. This is where the 50 RSI is going to be. This will be my first area to look to lock in profits if we reject the 50 RSI. My ultimate profit target is up here right about the 50-day moving average. So anyway, basically dead even on this trade so far, which I'm happy with that considering what's been going on in the market. So anyway, again, if we keep moving up, I'll continue to phase out, excuse me, on the way up. I'll take a look, see how the price reacts around the 50. If it were to go up to the 50 in reverse, I would go ahead and lock in profits. If it closed above the 50 and kept going, I would hold it, continue to phase out, and then I would run out of shares up here. And by the way, you know, I talk a lot about phasing out. And if you're not quite familiar with that, I do have a video in the description of the description of this video. I have 4 lessons that talk about, and one of those is how I phase out, how I take partial profits as the stock is moving my way or my position is moving my way. You know, I think it's very important to play offense and defense in trading. Playing defense, of course, is, you know, position sizing correctly, getting out quickly when you're wrong, but I think you need to play offense too. And I like to take profits as the market gives them to me, not the whole position, but a percentage of my position as it moves up. But you know, just like in sports, you have to play offense and you have to play defense. Aram Hussein, hey, how you doing? Good to see you, my friend. Thank you for coming by. Appreciate you spending your time here. So anyway, that is the plan on Amazon. Under the 200-day, I'm out. I'll phase out until I'm either out of shares or I reject the 50 RSI or I get to my ultimate profit target. All right. Unlike Amazon, like I just mentioned on Amazon, that's a discretionary trade. I use the under the 200, over the 200. I use that for my entry, but then it's a discretionary trade. DDM is a mechanical trade because it's an index of the Dow. I don't have to worry about holding through earnings. So I did buy this here back on the 26th of August. The previous day we went under the 200-day. The day that I bought it, we closed back over again. Any close below the 200, I'm going to get out for a small loss. But if I'm right, I'm going to keep, and it keeps moving up, I will continue to phase as long as it keeps moving up. This is a completely mechanical trade. So as long as this stays above the 200, I will stay in. I'll phase out as it moves my way until I'm out of shares. And we did hit one profit target today, which is nice because it seems like it's been a few days since we hit a profit target. So, we were down earlier and we reversed back up nicely. So this is a good sign. Took a little profit off here. It looks like currently at least we're above the 10-day moving average, which is a good sign. MACD has gone positive. That's a momentum indicator. So this is looking pretty good. This is DDM. This is the double leverage Dow. So it moves twice as much as the regular Dow would move. And therefore, because of that reason, I took a half position because a half position in the DDM is like your regular full position in the regular Dow. But glad to hit one profit target today. Be nice to hit another, but we'll see. And again, if it closes below the 200, I will be out, or I'll stay in as long as it continues above the 200 and continues to move up. I will phase until I'm out of shares. Hey, Frederick, good to see you, my friend. Thank you so much for coming by. That's our friend Frederick from France. All right, SPY. The famous SPY trade. So if you're a regular to this channel, you know that I do buy the SPY each day at the end of the day, and I sell it the very first thing the next morning. And I do this every single day, regardless of where the stocks are, regardless of where the technicals are. And you might think, why in the world would you do something like that? Well, this is based on a back test from Liz Ann Saunders at Bespoke Invest. There's two options with this particular approach. Option number one is buying the SPY at the open each day in the morning, selling it at the close in the afternoon, doing this every day. If you would have done this since 1993, buy at the open, sell at the close, buy at the open, sell in the close, you'd have actually returned a negative 13.9%. But if you did the opposite, which is what I do every day, I buy the SPY at the close every day, I sell it first thing the next morning. So buy at the close, sell in the morning, buy at the close, selling in the morning. If you would have used this approach, you would have actually returned 634.2% doing it this way compared to the opposite way, a negative 13.9%. So what this really means, everyone, is that all the returns in the S&P 500 since 1993 have literally come from the after hours, people bidding it up in the after hours and people bidding it up in the pre-market session and selling it first thing into the open. That's what it means. And you can see the results are very clear. The blue line is the buy in the afternoon, sell in the morning. The orange is the buy in the morning, sell in the afternoon. There is a clear edge to doing this. There are ups and downs, as with any trading approach. Even if you have an edge, even if you have a solid edge, in the short term, anything can happen. That's why I was telling you before, take the long view on your trading, because you might be trading a really good approach or a really good system or setup, but even if it's great, it does not mean it's going to work in the short run, right? I mean, it can go through a drawdown phase, even though you have an edge, just like a casino. Casinos have an edge in every play they game. Every game they play doesn't mean that they win every hand. They go through losing streaks also, but in the long run, they always win. And that's the same approach with trading. That's why I'm telling you guys, you have to take the long-term approach. You have to let the edge play out, and you have to position size correctly so that you don't get too beat up if you get into a trade or start using a system when it just happens to go into a drawdown. Doesn't mean there's anything wrong with the approach. It just means that that it's a normal drawdown. So that's why position sizing, taking the long view, is so important. Okay, so with that said, I did buy it yesterday here at 286.87 and took a small loss on it this morning at the open. Of course, if I would have kept it, would have turned into a nice gain, but that's not the approach. The approach is buying it in the morning, buying it in the afternoon, selling it the next morning. We've had a nice little run here lately. The last couple days, back here we bought here, had a huge gain at the open, bought again at the close, had a nice big gain at the open, and then it completely reversed. So anyway, this is a small loss here, but I've been using this. This has actually been one of the best performing approaches lately, for sure. So I will be buying this again at the end of the day and selling it first thing in the morning. So that is what we have. We have Amazon. Looks like Amazon is continuing to move up. I think we're slightly positive on this trade, so that's good. We're going to keep this above the 200, continue to phase out if it goes up. DDM is moving up nicely, and then SPY will buy at the end of the day. And then I also have the Qs. I did sell puts on the Qs. So what does that mean? That means I chose a strike price here at 169 that expires on September 20th. So basically what that means is if the price stays above this 169 price by September 20th, I will be able to keep all the premium that I got for selling this put. If for some reason it goes down, closes below, and I'm required to buy the stock, then I'll have to buy the stock at this price. And you might ask yourself, why did you pick the 169 price as your strike price? So what I like to do is when I sell puts, I like to look at strike prices and levels on 3 time frames. And so I look at the monthly and the weekly and the daily. On the monthly, I chose the 169 price because we have the 20-month moving average above us. This should act as some type of support, right? On the weekly, we have the 100-week moving average upward sloping still above us. This should act as some support. Technically, the 1 ATR channel should act as support. The 50 should act as support. The 100 should act as support. So the 169 price lined up nicely there. And then on the daily, wasn't perfect, but the 169 price lined up close to the 6 ATR channel. And you know, when prices get up to the 6 ATR channel or down to the negative 6 ATR channel, a lot of times that's going to be about the max it's going to go. So anyway, this one's working out nicely. It's up today. Definitely positive on the put trade. Currently, right now, I've got about half of the premium that I'm going to get from selling that. If I get to where any point between now and when it expires, if I get to 80% of the premium, I'll just go ahead and lock that in. So anyway, things are working out nicely there. Aram says, really interesting strategy. For how long have you been doing this? And can I ask what your return has been since then? I've been using it since February 26th. And if I remember right, I think I did the numbers on this a couple weeks ago. And on a yearly basis so far, I think it had returned approximately 6%. And I believe it had outperformed the S&P, just the buying and holding. So yeah, I think on an annual basis, it was about 6%. No, excuse me, 6% since I've been using it. So on an annual basis, about 12. But that was a couple weeks ago. I think it was close. So, but you know, if you take the long-term approach, 634.2%, and actually our friend Stephen Burns, this was till January of 19 was the 634.2%. Steve Burns did a more recent study about a month ago, 712.63. So let's see, we have 19 plus 7. So we have about 26 years, 634 or 7, excuse me. I'll use Steve's 712. Divided by 26. Yeah, I mean that's an average of 27% a year on the average. So pretty good, right? Pretty good. So yeah, but for me, the annualized return I think is close to 12, but because it's part of the year, it's about 6% return. Hey, Ramble Ron, good to see you, my friend. Hope you're doing well. Thanks for coming by. You on your lunch break today? All right. Let me get all this stuff off of my screen here. All right, what was I doing? Yes. All right. So as you guys know, I like to do a little bit on trader psychology every day. I think it's super important. This is from our good friend of the channel, Steve Burns, at @SJosephBurns on Twitter. And if you have not subscribed to him on Twitter, I think you're doing yourself a big disservice by not doing so. He's such a great guy. He posts such good information. He's a master trader and author. So, when Steve Burns says something, I like to listen. So he says every solid, he didn't say, Clarence Oliver said, but he posted this. Every solitary adjustment to my trading strategy for the last decade has been on ways to take less trades, whether I'm day trading, swing trading, or position trading. I want to take less and less positions for better overall wins. And, it's so true, everybody. Our job as traders is to trade well. It's not to trade a lot of positions, right? And, I know how it is. You want to get in there. You want to make something happen. You feel like if I take a lot of positions, I feel like I'm trying to make something happen. And you are trying. There is no doubt. But I think the takeaway from this, guys, is that it's important to take quality positions. And if you don't have quality positions, just don't take them, right? Like he said, every solitary adjustment to my trading system for the last decade has been on ways to take less trades, whether I'm day trading, swing trading, or position trading. I want to take less and less positions for better overall wins. And, it's true. Just because you're taking a lot of positions does not mean you're going to make more money. I've heard this from a variety of well-known traders that I know. They just want to trade less and less, just take better quality entries and let the other ones go by the wayside. It's less work too. It's less work. It's less stress. So thank you, Steve Burns, for that great post. And again, Steve Burns at S. Joseph Burns. I would really suggest that you go and take a look at his or subscribe to him on Twitter. Frederick says, I am on the good way. I bought nothing today. Oh, well, there you go. Just like we just said, right? You bought nothing because there probably wasn't anything to buy. So congratulations, and congratulate yourself on that. If you don't see anything on a day, then just don't take a trade, but congratulate yourself for realizing that there weren't any good trades, right? Ramble says vacation for a week. All right, sweet. Hey, Murat, how you doing, buddy? Nice to see you. That's Murat from Norway, Frederick from France. So we've got a little international organization going on here. So, all right. So let's get to it. What time do we have? About half an hour left. All right. Let's go through, see if we have anything potentially that we want to do today. All right, so let's start with Apple. So I don't see anything on Apple here today, but I see some good things setting up. You can see the green lines are the 1 ATR channel and the negative 1 ATR channel. Whenever we make a higher high outside, closing outside the channel, and then we come back into the value zone, this is where I'm interested in taking trades, is in the value zone. Basically mean reversion, getting down here into the mean, because the easiest moves you're going to have are from in the value zone up to the third ATR channel, in the value zone down to the negative third ATR channel if you're shorting. So I have 3 requirements for these kind of trades. The first requirement is we make a higher high, we come into the value zone. Has that happened? Yes, it has. We're smack dab in the middle of the value zone. Criteria number 2 is that we have to see the stock stop moving down and start to move sideways. Does this qualify? Yes, it does. It is now moving sideways. The third criteria that I'm looking for is some kind of V1 or V2 entry, which means that like tomorrow we would go under today's bar and then close back above. And again, if you want more information on V1s, V2s, I have a video in the description here. It's a YouTube video. I spend about 50, 60 minutes on describing exactly what a V1 or a V2 entry is, but it's one of my favorite entry into a position. And I'll show you as because there's some going on today. But essentially I would need some kind of attempt to go down and then rally back up. But, you know, Apple is looking good for this, but I don't have an entry trigger yet. So nothing on Apple. Adobe, nothing on Adobe here. It's just been a sideward sloppy mess here. It looks like we've lost the 100-day moving average. You know, the ideal place to buy this right here, right now, would be down here when we have a confluence of like a 30 RSI with the third ATR channel with a 200-day moving average. You know, this would be an excellent place to buy because it shows a lot of different types of buyers. There's going to be buyers in here that are going to buy off the third ATR channel. There's going to be buyers that are coming in here at the 200-day moving average. There are going to be buyers that are coming in here if we get to a 30 RSI. So right here is the place that we want to look for Adobe, to possibly buy Adobe. So, you know, mark that down, put it on your wall. If the prices get down into this area, that would offer us a good risk to reward ratio where there's groups of buyers coming in, but nothing today. Silver just continues to move up. Boy, if you're shorting this, you're having a tough time. We're at a 77 RSI. We're getting close to the 6th ATR channel. That's generally where things run out of gas, but not always. You can see right here, that was about the place that it did run out of gas. We're getting up there again, but this has been a very, very strong stock. It's too high for me to buy. It's too high for me to short. There's what I would like to see is I'd like to see the 5-day EMA come back down, cross under the 5-day, cross under the 20, then cross back over. That's a legitimate signal. We took that same signal back here on the 10th of July. The 5-day EMA was under the 20, crossed back over, and that was our entry signal. And you can see that was a wonderful trade, and I scaled out all the way to there. I ran out of shares there. Another option would be, again, like I just mentioned, for this to come back down into the value zone. Step 1, step 2, move sideways. Step 3, have some kind of attempt to the downside and reversal, and that would also be a potential entry. But if any of you guys have silver and have held this for the mechanical 520 crossover, congratulations, because that's a great trade. All right, advanced micro devices. Not really doing anything today. This is going to have to move up higher for me to get interested in, or it's going to have to move lower for me to get interested in. And what, you know, to the downside, getting down to a 30 RSI, or perhaps down here. I mean, this is the sweet area for a lot of stocks where you have the third ATR channel and the 200-day, but nothing on AMD today. All right, Amazon, as you know, we do have a position in this. We're right about even on it. We bought it because it closed, the previous day closed under the 200, back over the 200. So we're keying off the 200 as our stop, as our line in the sand. Close under the 200, we're out for a small loss. If it keeps moving up, we'll just hold it, be patient with it as long as it's moving up. Boeing, I just mentioned the V1s and V2s. This is a V1 right here. Here is day 1, here is day 2. Day 2 today washed out or went under day 1, and then it looks like it's going to close above day 1's close. That's a valid V2. It's also closing above the 200-day. This is all good. I like this. Unfortunately, we're to 60 RSI, and we are very close to the third ATR channel, so I'm not going to buy this, even though it offers me a good risk to reward. About 90% of prices fail at the third ATR channel, so I don't want to buy something right before I know sellers are going to come in. I want to buy something when I know buyers are coming in. So I think, who knows, this could continue to take off. I have no idea. But it just doesn't fit my filters as far as entering a trade. Alibaba's not bad here. We have a move up. We come down into the value zone. We move sideways. We quit going down. This is a V1. Here is day 1. Here is day 2. Day 2 washes out day 1. Looks like we're going to close above day 1. At the same time, we are closing above the 200 day, which is also good. So this is definitely a potential for today. Where would my stop be? My stop essentially would be halfway of the washout bar, which today is the washout bar. But I would probably just use the 200 day as my stop. So, you know, compared to what I just showed you on Boeing, see, we have a lot more upward movement to the third ATR channel here with a small potential loss if we're wrong. And I don't know if we're going to be right if we take the trade. Of course, we never do, right? But you have to look for setups that offer you good risk to reward ratios. You have to look for setups that offer you good technical levels. And this one right here, this moment, does look fairly decent. So I am going to mark that one. Caterpillar, nice V1. Here's day one, day two. Day two washes out day one. Day three closes above. We went from under 30 back over 30. Not too bad. I mean, it's pretty good. I'd like to see a double bottom with the bullish divergence here. I think I'm going to let this one go because I already have DDM, which is the double leverage Dow, and this is a big part of the Dow. But this isn't bad. The other thing too is that we have the -1 ATR channel downward sloping above us, and the 10-day, which should act as some resistance. So I'm just going to let that one go. DDM, we have this one, went under the 200 back over. That's why we got in. We're staying above this. We're staying in this position as long as it's above the 200. Thrilled that we hit a profit target today. It's been a few days since we've hit profit targets. Walt Disney's having a good day here. It's a 48 RSI, so I know we're going to have some potential sellers coming in at 50, which shows me I probably don't want to take this trade here. It's not really a good setup. It's a little V1, I guess, but I just don't like that the 50 RSI is just right above us. I know sellers are going to be coming in there, and we're also going to have some resistance here and here. So nothing on Disney. Etsy looks pretty good here. We make a low, we have a rally, we come back down. See this V1 today? Here's day one, here's day two. Day two washes out day one, closes above day one's close, closes back into the channel, the green lines. So this is good. This is good. MACD is positive. So Etsy looks pretty good today. So I'm going to mark that one as well. Ford, big day today, bullish engulfing bar. Did reject the 100-day, the 200-day moving average, so I don't like that so much. Facebook, V1, day one, day two washes out day one. It would have to close above day one in order for me to get interested. But I think I like Etsy better, closing over that 10-day, if it does. This still has the 10-day above it. So, you know, apples to apples, looking at these two trades, Etsy looks better because it's over the 10-day moving average, and just that by itself is a good sign. MACD is positive. On Facebook, MACD is negative. Five Below is having a really nice day here. It did reject the downward sloping 50. I don't like that. We have the 200 above it. I generally don't like to take trades that are too high above the 1 ATR channel, so I'm going to let that one go. Has earnings today. I don't know if those earnings were in the morning or afternoon, but regardless, I don't like this. If there's earnings in the afternoon, I certainly don't want to take it, and if the earnings were this morning, I don't like how it rejected this downward sloping 50. Gold looks like it's stalling out here at the third ATR channel. We have a bearish double top with the bearish divergence. Here's a high. You can see how high these bars are. This is momentum. We sold off a little bit. We make a higher high, but this higher high, the momentum on this second high was much lower than this high. So this is generally bearish. I'm not going to go ahead and short this, but it's bearish, and that's probably bullish for the stock market. So nothing on gold. Google V1, MACD is negative, so Etsy still looks better. What I'm waiting for on Google, I'm waiting for the 1030 simple moving average crossover. This is a good back-tested approach to trading Google, profitable in the long run. Right now, the 10 is under the 30, 1178.51 compared to 1180.02. So if we can close back above, if the 10 can close back above the 30, that will be my entry signal. And that's, like I said, it's a valid back-tested approach to trading Google. Goldman Sachs, nothing really on Goldman Sachs. IBB, nothing on IBB at all. For me to get back into IBB, I'd have to wait for a crossover. I'd have to wait for the 5 to cross back over the 30. That's a good, profitable, back-tested approach to trading IBB. Intel is just really consolidating here, isn't it? Not doing much, down a little bit on the day. I expect this to move one way or the other. Problem is, I don't know which direction and I don't know when. But whenever you start moving sideways in these tight ranges, there's indecisiveness going on there, and it eventually will break one way or the other. But again, I don't know when, and I don't know what direction. Arms from Sweden. Okay, good. So we have a little more international presence. Great. Sweden, Norway, France. Johnny, good to see you, buddy. Eastern Washington there. Good for you. A little American presence as well. Murat, Google is interesting. Every gap being closed as it moves on. Yeah, this gap got filled. That got filled there. Yeah, gaps do not like to be left open. They're vacuums of prices that haven't been tested. So you're 100% right. This gap got filled. This gap got filled. So, but again, on Google, I want to wait for that 1030 SMA cross. Russell's having a decent day today. We do have a double bottom here. We do have a divergence. We have the low, we have the rally, we have the lower low. This first low had much deeper MACD bars. The second low had more shallow MACD bars. This is what's called the double bottom with the bullish divergence. This can be definitely bullish. I learned this from studying one-on-one with Dr. Alexander Elder. Let's look at the weekly. I don't really see an S signal here. You know, I mean, I guess you could take this signal based upon that we broke out to a new low outside this range and then back in. You could, but I think I'm just going to let this one go. Johnson & Johnson had that big up day and immediately just got hammered to the downside today. So nothing there. Victor says, we have all Scandinavian here. You're from Finland. Hey, great. So we have Sweden, Finland, Norway, and France. All right. Johnson & Johnson, nothing there. Coca-Cola is moving up nicely. This is more of a defensive play, but this certainly has been moving up nicely. No real indicators here. I remember wanting to buy Coca-Cola here on this V2. Day 1, day 2, day 3. Day 2 washed out. Day 1 inside the value zone. But you see how we didn't close above day 3, didn't close above day 1's close. Otherwise, I would have bought it. But I didn't because I have to follow my rules. But that would have been a great trade. Lockheed Martin. Made a higher high, needs to come into the value zone, move sideways, so nothing there. MasterCard is a V1 here, 53.57 RSI. I think I'm going to let this one go because the XLF, the financial ETF, I think had a little better risk to reward. We did buy MasterCard back here. We had a good trade where it dipped down under the 30 RSI intraday, closed back above, also pegged the upward sloping 100. We bought this here, phased out all the way to there. So that was a nice trade, but I think I'm going to let that one go. Merck V1, a lot of V1s today, but that's too high of a V1. Microsoft actually down on the day. So nothing really on Microsoft here. Netflix. One thing interesting about Netflix is we make this low. Well, we made these lows. See how deep these bars are? Then we rallied. We came back down. We rallied here. We came back down. MACD was more shallow. That's bullish. And we did rally off that. Now we're coming back down. Now we're coming down, making another low, making a triple bottom without any red bars at all. That's very bullish actually. It's called the missing right shoulder. But I don't really quite see a entry here. You need the setup to look good, but you need some kind of entry, a V1 or a V2 or an under 30, back over 30, and I'm just not seeing anything. Nike is having a good day. Close under the 200, back over. That has worked out nicely. I wouldn't buy it here, however. Frederick says, American people know how to trade already. Well, you're learning to trade too, Frederick. Merck says, Greg, you're from Utah. If you dig your history a bit, you may find that you trace back your family to Scandinavia. I think I'm German and French. But Dr. Jorgensen, who is normally here in the chat, but he's riding his motorcycle around Pakistan at the moment. He is definitely from Scandinavia. I have an uncle that lives in Denmark, because my family is actually half. I said German. I meant Swiss. I'm half Swiss. My mother was Swiss, so I definitely do have a little bit of European heritage for sure. Philip Morris. Well, Philip Morris beat me up yesterday. I didn't buy the stock, but I sold some puts down here to 72.50, and it closed under the 72.50. I had to go out, take the loss on that trade. It wasn't too bad because I position sized correctly, and then today goes right back up. But, you know, just want to, I don't have enough time to talk about that. So I have to get through these. All right. PayPal is flirting with a V1 right here, which is pretty good. Isn't quite there yet. Yesterday's close was 107.45. We're right now at 107.44. You know, this is a higher low V2. This wouldn't be bad. If I were to buy this here, I would use the halfway of the washout bar as my stop right here. So I'll mark that one. MACD is positive. We are in the channel. The Qs, of course, I have that with the puts, but no new entry position here. Snapchat, nothing there. S&P took that small loss overnight. We'll be buying that at the end of the day. Square, little bit of the V1, not a great one though. Not a great one, and it's underneath the channel, which I don't like. Double bottom with the bullish divergence though. So, you know, I'm starting to see some things here in the tech market that you know, pretty weak, but I think going forward, it's starting to set up. SSO, double leveraged S&P, nothing there. Bonds, we talked about bonds yesterday. We did test this high, and it looks like we failed, and it also looks like we may close back under the third ATR channel. So to me, this is bullish for stocks because people were putting money in these safe assets, and maybe they'll take them back out of those and put them back into the market. Who knows? But we did have a false breakout today to the upside. We went higher. Now we're down below. You can see when we went higher, we were at 3.5 ATR channels. This previous was up at like 8. So, you know, look at the RSI divergence. Look how high the RSI was here on this high. Now we make a higher high. It's way down here. So this is generally bearish. I'm not going to short this, but in the context of, if you know, bearish for bonds is probably bullish for stocks. So you speak French, German, and English. A petit peu and ein bisschen on the German side. All right. Tesla, nothing there. Twitter, I don't see anything there. I think Murat has this, so hope that keeps going up. Hope that goes up for you, bud. Natural gas having kind of a strong day. I think that has to do with the hurricane we have possibly going on in the Caribbean. You know, this would be a valid signal. We were under 30 intraday. We're closing back above 30 intraday. We were under the third ATR channel, closing back above the third ATR channel, and it is a V1. I'm just a little concerned about this big bar here. I don't like to get involved with a trade where I had a huge bar the previous day. So that might be a good entry. I'm just not going to take it. Oil rejected the 200-day. The dollar had that huge sell-off, but now we seem to have some strength to the upside. VIX, I did get out of my VIX position yesterday. I sold a put. This was a nice trade, worked out well. Nothing today. Verizon, man, look at Verizon. Outside of the one ATR channel, up to the second ATR channel, 61 RSI. Too high for me to buy here, but if any of you have Verizon, I'm glad that's moving up for you. Walmart, V2 here, but it was too high of a V2, day 1, day 2, day 3. Energy, you know, what I'm waiting for on energy, I'm waiting for a close under the 30, back over the 30. If we could get down to this third ATR channel, that would probably be about a 30 RSI. So if we could go under the 30, back over, under the third ATR channel, back over, that would be a good buy. So right in this area is where I'm waiting for XLE. Financials, you know, this is a good, again, this is a good profitable approach to trading the XLF, which is the financial ETF sector. When you have a close under the 200, back over the 200, stay in it as long as it stays above the 200, get out under the 200 if you're wrong. But see, this gives me a good risk to reward ratio right here. If I'm wrong and it goes down tomorrow, I'm wrong very small, any close below the 200. If I'm right, I have a lot of upside potential. So XLF looks pretty decent to me. I'm going to mark that. Real estate, nothing really there. Utilities, nothing really there. Healthcare, you could buy this over the 200. I don't know if it's going to get there. And pharmaceuticals have really been in a bad way, haven't they? So, all right, let's take a look at the potentials for today. So, Alibaba. So, we moved up, we moved down, we moved sideways. We did have a V1 back over the 200-day. MACD is about even. On the negative side, we're at a 48.91 RSI. If we're wrong small. So let's see. Etsy, I do like Etsy. I do like that we had this higher low V1 back into the channel. MACD is positive, so I think I like Etsy better than Alibaba. Looks like PayPal is not going to trigger, at least right this second. And financials with the close back over the 200. It's a legitimate, you know, it's legitimate and back-tested approach. Doesn't win very often, but the wins are very big and the losses are very small. But I think this puts us in a pretty good place for a small loss if we're wrong. Let's take a look on the weekly on Alibaba. It's always important to look at multiple time frames. So a few weeks ago, we had this big up move. We came down here about, well, it was lower than the 50% mark of this big bar the next week. We have, on the weekly, we have the moving averages above us. So we have 5 minutes. So let's keep in mind a couple things. We do have Amazon, which is tech, right? So we don't want to add too much tech. So with that being said, I'm going to go ahead and take PayPal out of the equation. Alibaba, you know, you have some China exposure. All right, Alibaba's at a 49. There's going to be some resistance at 50 above, so I think I'm going to get rid of Alibaba. I mean, the setup's good. It's just that, you know, if it were close above 50, it would make me feel better. So let's wait and take a look at that. I do like Etsy. The Etsy's my favorite one here. And the financials I do like just because it gives a good risk to reward ratio. So I am going to buy Etsy. By the way, it's going to be a half a position on Etsy because Etsy is underneath the 200-day moving average. And whenever we're underneath the 200-day moving average, I only take a half position. All right, so I'm going to go ahead right here and I'm going to buy a regular position in XLF. That will be a completely mechanical approach.
Order partially filled.
All right.
Order filled. Order filled.
2641. All right. So on XLF, 2641 is the new entry. Again, this is a mechanical trade. As long as it stays above the 200, I will stay in. That's all there is to it. If it closes under, I'll just take a small loss. And, you know, the idea here is to eventually get a big move that, you know, will give us 3, 4, 5 times what our loss would be. And Etsy, I'm going to buy Etsy, and I already have an order in to buy that right at the close. I'm gonna pass on Alibaba because it rejected the 50 RSI above. It's a good setup, but again, if the price is under the 50 RSI, once it gets up to the 50 RSI, you're probably gonna have people coming to sell in it. So I'm gonna let that one go. So my positions for today, we already bought XLF right here at 2641, and then I will buy Etsy today, and it will be a market on close order, so it will purchase right at the end. And so let's see. So I don't know that price yet. And then the SPY, we took that small loss overnight, but then that will also trigger at the end of the day. So we'll see where we get filled there. Anyway, I'm glad that we're having a nice green day today. That is great. Boy, we needed it. It's been tough sledding. It has been tough sledding this last week of trading. It's been very volatile, very whipsawed, very difficult to trade and to make money. All right, so what do we have? We have about 15 seconds left. Hey, JT's here. Good to see you. You did just make it in time. All right, so we have 5 seconds left. And we'll see where we got our other fills.
Order canceled.
288.89. So our new position on SPY is 288.89. and $54.35 on Etsy. Okay, well, it looks like we're starting to accumulate some positions again. Well, I guess I should leave that there. All right, so Amazon, barely underwater, just barely, but still above the 200. DDM, we did have a nice day today. We hit one profit target, thankfully, but that's nice. Oh, I should say, Amazon is discretionary. I took it under the 200, back over the 200. You know, depending on what the prices do up here, I'll continue to phase out. If we hit the 50 RSI and reject, I'll get out. If we start extending away from our entry and it doesn't act well, I can also pull the trigger there. I'm completely mechanical. I'm going to stay in this and phase out to the upside as long as it keeps going. If it closes back below the 200, that is my exit point. We entered here 288.89 at the end of the day. That's our overnight trade. Etsy, we had this nice higher low V2 back into the value zone. MACD was positive, so my initial stop on this is going to be halfway of this washout bar. This is the washout bar today, washed out yesterday. If we get a close back below half here, I'll go ahead and get out. And you might ask why halfway? Because from a Fibonacci standpoint, it should hold some support at 50. If it loses a 50, that's not a good sign. And that is a discretionary trade as well, the Etsy. And then XLF, this is a mechanical trade. As long as it stays above the 200, I'm going to stay in it. If it closes below the 200, I'll stay in it and phase out. If it closes below the 200, I will go ahead and just exit for a small loss. So that is the plan. Amazon, double leverage Dow, overnight SPY trade, Etsy, and XLF. So, you know, always do a correlation check, everybody. Let's see. Uh-oh. Is our internet down? Can you guys hear me? Uh-oh, I think we lost the stream. Well, apologize for that, everybody. I don't think anybody can hear me here. I think we're having some difficulties. So I'm gonna go ahead and just say goodbye, and hopefully we will see you tomorrow and not have this problem. On the way out here, I'm gonna play the disclaimer. So U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit, No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their may have an interest in any security, financial instrument, or financial product mentioned